Good day, traders. Welcome back to Fides Trading Channel, and we are back again with another Fides Flows video. Today, we're doing a deep dive into the markets for Friday, the 11th of July, 2025. We're going to see what happened during this past week, how we could potentially capitalize on it in the coming days. So, if you're new to the channel and you've never watched a Fides Flows video, basically what we do is a deep dive analysis into the price action and fundamentals behind gold, Nas100, and Us30, giving you a clear roadmap for the trading week that is to come. Using high time frame technical analysis, I identify key zones, momentum shifts, and trend structures, and then combine that with real-time macroeconomic drivers like interest rates, inflation data, and market sentiment. So whether you're a swing trader or day trader, this breakdown helps you understand what's really moving these markets and where high probability setups might form. Looking at the gold markets, gold is currently trading at 3354 after a very bullish push during this week. We can see at the opening of the week, the markets actually had a significant drop to the downside where it found support at 3287. From there, on that Wednesday, we had at the opening of the New York session, we actually had a firm bounce where markets sprung all the way to the upside for the remainder of the week. We can see that the price of the markets actually tested the 3360 level today, had strong push to the upside. We had a wick rejection on the 1 hour and markets firmly pushed to the downside. These two lines here actually show the Asian session, the highs and lows of the Asian session, which is invalidated now because markets firmly broke out during the London session. So it seems that the price action structure has shifted towards the bullish side, especially on the 1 hour time frame. We can see that price has broken above the 21 and the 50, 2150 and 200-day SMA, and we are very much trading on the bullish side of the RSI, clearly showing bullish momentum, with price action actually tapping above that overextended level. So it is clear that momentum and volume is in favor of the bulls. Unfortunately, I missed this move from Wednesday all the way to the top side because our indicators still indicated for the bearish momentum, although there was some RSI divergence that we can observe on the RSI right here, where price was making lows, but the RSI needed very little momentum as it sprung all the way back to the upside. Dropping to the 4 hour, we can actually observe that price is still trading above the 200 SMA, and we are finally broken above the 21 and the 50-day SMA, although it does need to be said that we are still waiting for the cross of the 21 over the 50. We are trading within the bullish region of the RSI here as well, which adds to the bullish confluence we are seeing from the 1 hour. So as it stands, it does appear that price has broken above the 3351 pivot level. We are testing that support at 3360, although strong level of resistance here, so we need to wait and see whether this level does actually hold or if price will break back within the range. To add further confluence, we do have a bullish support trend line. We can see that this has been tapped 3 times already, which does add an extra layer to the bullish side of this market. So as it stands, momentum is in favor of the bulls, and I will be looking to long positions to the upside. Obviously, I will cover this in my Fides weekly flow videos, but we do need to analyze the daily, weekly, and monthly charts, which does indicate that the markets are overextended and we could be looking at some bullish momentum, bearish momentum stepping into the markets. We can also observe the future prices at 3368, which is 16 points ahead of the current price, which does add an extra layer of bullish confluence to this market. Can see that we are in a bit of a retracement phase right now after tapping that resistance zone, and where I could potentially look for levels that the market could push off would be here at 3340. We can see that we had a bit of a resistance level that did form there. Markets have firmly broke above. So if price comes back there, tests that level and pushes to the upside, that would be a prime candidate for an opportunity right there. Just taking a look at the 4-hour chart, the 5-minute chart. So I'm using the 1 hour for structural purposes and the 5-minute for entries. We can observe that today, especially with the bullish confluences that we saw, that price was using the middle ground between the 21 and the 50-day SMA is almost as though it was a bouncing platform where once price would get in there, it would provide us with a bullish signal and it would actually push all the way to the upside. So I can observe one there, here at 1 o'clock, another one at 2 o'clock, one at 4, one at 6:50, another one here at 9:10. You can kind of mark this one off too at 8:05 and 11, 11:30. Kind of one we can see here at 2 o'clock, another one at 6:20, and so on and so on. We can see we are currently within the sweet spot zone, so we could actually get a push off this 3351 level where price actually pushes to the upside from there. But I just thought that that was a keen observation that I made, and although the markets had moved significantly fast, I had not tapped into those opportunities, but it is definitely something to look out for in the future when there is a trending bullish market, something to keenly observe. We can also see here that once the markets had turned bullish and we had our cross of the 21 over the 50 on the 5-minute chart, we can see that it did come down into that 21 and obviously push higher, except for this retracement here where we retrace back to the 200 SMA before continuing the trend. Just also keenly observing that we are in the bearish region of the RSI now, but we did tap those overextended regions before the retracement took place. So definitely using the 1 hour and the 5-minute as time frames for looking for trades, and it has been working out in my favor, especially for gold. I'll definitely do a deep dive into my analysis and the confluences that I'm looking for in a different video. Hoping to do some strategy videos this weekend. Anyways, moving on to US tech, we are looking at Nas100 charts. Taking a look at the 4-hour chart, we can see that price was very much in a consolidation the entire week, despite that massive push in the last week of June, massive bullish push in the last week of June. Markets seem to have stabilized for the past 2 weeks and have just been trading very, very much in this tight consolidation region. I'm actually just going to mark it off here. So we have 22,900 as the support zone as resistance zone with support at 22,650. Now that being said, price is still trading above the 21, the 50, and the 200-day SMA. We did have some bearish divergence in the RSI on the 4-hour chart. We can see here that although new highs were being created, it actually acquired a lot less momentum, which is probably what pushed us into this consolidation phase right now. We can see, although we did get taps within the sweet spot regions, no new highs were created, and for that reason, this market did just strongly move into a consolidation zone. So I would call it bullish consolidation at the moment. Moving to the 1 hour, we can see this consolidation playing out a little bit more clearly. This was the Asian high. This was the Asian low. Price pretty much just traded between these two regions for the entirety of the day. So there wasn't really much movement throughout this day. Sorry, I just want to put this back here. There we go. Okay, so we can see the price is just bouncing between those two levels. It's a very narrow consolidative range, so not much to actually trade off here. Unless you're scalping, then you can definitely go down into the 5-minute chart and look for some entries with a short or long, but yeah, I would only trade the opens. That being said, on the 1-hour chart, we can see that price is just pretty much trading upon the 50 and 21 SMA. Still showing bullish signs though, with the 21 trading above the 50, 200 far removed from the 200-day SMA. We do have bullish support trend line that is at play, but it's nowhere near current price action, which is trading at 22,833. As for the RSI, it's very much just sitting within the sweet spot region, not really showing any confluences to the upside or downside, so no real market directionality there. For that reason, I'm not really going to go into the 5-minute chart. because there wouldn't really be much to explain from there. All I can say is that there's bullish consolidation until we see a break of these particular levels. There's not much we can do. Moving on to US30, we take a look at the 4-hour chart. We can see that on the 4-hour chart, price is very much trading bullish after that massive bullish week we had at the end of June. But as it stands for this week, we just had very much strong broad range consolidation. We can see that we actually had strong resistance at the 44,800 level with support at about 44,200. Price very much is bouncing between these two regions. We did create a double top formation, as you can observe here. Oh, I don't know why that didn't work. There we go. One. Why is this being so difficult? There we go. Two. Come on. Okay, so we had we had a double top formation right there, and it does appear that price is moving low at the moment. As it stands for the day, this was the Asia high, Asia low, and price very much traded close to the Asia lows for the majority of the day. Price is still trading above the 21 SMA, above the 50 SMA and 200 SMA, so that's very much intact. The bullish support trend line is still very much intact, but moving sideways. So we are in a bullish consolidation sort of move. Taking a look at the 1 hour, we can see that markets had a strong bearish move on Monday. Tuesday pretty much moved flat. Thursday, Tuesday and Wednesday pretty much moved flat. And then Thursday we had a huge spike to the upside towards the resistance level at 44,800 before Friday opened, and we had a firm move to the downside. There wasn't really much movement throughout the day except for this massive bearish spike in the Asian session. So not much to report on. We can see that price is trading upon the 50 and 21 SMA, which is crisscrossing each other at the moment. In terms of RSI, we can definitely see signs of bullish momentum support of bullish momentum with a lot of keen spikes to the upside. But as it stands, we are seeing low levels of momentums as we approach the bearish region, which we are currently in. As it stands, price is trading below the 21 and the 50-day SMA and fast approaching the support level at 44,200. So yeah, not much to report in terms of US30 for this week, but I definitely want to say I'm still bullish on this pair, and I will be looking for a reaction at that support level. So that's very much your indices and gold. Taking a look at the VIX index, we can see that VIX is trading at 16.21, which is still very much risk on sentiment for investors. So definitely still looking for risk. But as we can see per the indices, investors are sitting on their hands while they are inviting bullish nature into gold, which is kind of contradictory to what we're seeing in the VIX index. But we do have to say that the VIX actually closed yesterday at 15.74, while it opened the day with a huge spike to the upside, actually peaking at 17.13, which does support that investors were taking their money out of indices and putting it into gold. So there wasn't much in terms of fundamentals for the day, but in terms of headlines coming out of FX Street and TradingView, we can see that the overall sentiment for gold headlines is bullish, where news is back on the tariff proposals and geopolitical tensions. So it is adding an added layer of bullish confluence to gold, while on indices it is highlighting the tariff implications by bringing in bearish pressure on indices, while also highlighting Nvidia hitting a record cap at 4 trillion. It is clear that other tech companies aren't doing too well, which probably explains why we were seeing a drop in US tech and US30, and just very much that consolidated nature. So there wasn't really much mixed reviews, very much for a mixed week in the charts for indices. But that is very much the analysis for the day. Please note this is not financial advice, but my personal opinion on the current state of the markets. Before taking any positions in the markets, make sure to do your own research first. Like and subscribe for more content, and I'm definitely going to be dropping strategy videos, so keep a lookout for that in the future. Happy hunting, traders, and I'll catch you in the next one. Cheers.